we have 5, maybe 6 different theories or different mindset approaches to how you want to approach stop losses. So the first one is the 5% tight stop loss. Whenever you put your trade in, you can click 5%, and that 5% will be 5% of the actual position that you've got as a really tight stop loss, right? So what would that look like? That would look
and
like
the thing to remember when you're doing 5% stop losses is that's going to vary relative to the amount of leverage you're using, right? And so if you're using super tight stop losses like that, with high leverage, you're going to be getting stopped out all the time. So it's important to think about then your stop loss relative to the amount of leverage that you're using.
Yeah. And normally you can see Teresa's chart here, see how we go up and down and up and down. And sometimes you'll enter the trade and it'll immediately go in the opposite direction just briefly, right? So you got to know your charts, know your fib levels, know where everything is going, so that you don't inadvertently jump out of a trade that's going to end up being a perfect trade. So putting in a tight stop loss is good. I think it's a good strategy if you don't want to lose any, lots of Bitcoin or whatever the coin is that you're trading. And it's good specifically if we're taking off. Like if we're taking off, we talked about how to enter, when to enter a trade in a couple of live streams ago. So we'll leave the link down there for you, because we talked about taking off once you've got a confirmed breakout, which means that volume is there to push the price up. And as it pushes the price up, it's not going to come back down to where you're entering. So a 5% or a tight stop loss in those kind of trades makes sense, right? Because it's unlikely that you're going to get stopped out. The other one,
I think the important
thing to
remember is if you're using tight stop losses like that, you really need to be nailing your entry points. So this is, sorry, let me shut off my charting here. I always look at the 1 minute to enter on the 1 minute. And you want to be looking at the indicators, does the Ichimoku agree with this trade? Is the RSI bottoming out? If it's not, you're not using a 5% stop loss. I use some specialty indicators too, which are paid indicators that help me nail the entry points. But if you're not really nailing your entry points, then using 5% stop losses are a real risk. So if the market's not already breaking out, or you're not super confident in your entry point, then that's often just an invitation to get stopped out, even though it might have otherwise been a winning trade.
Yeah. So we have a neat comment here. These purple charts are absolutely insane. How can you read anything on this? Yeah, it like as I said, I am creative and visual, so I get really strong instincts, and it's kind of like pickup sticks. It's like I will see things in the charts that no one else on YouTube is talking about it before they actually start talking about it, because all of the patterns are there, and I just have that kind of mind that can read it. We do kind of pare it back a little bit for you guys, which is why I've got 2 Bitcoin charts that I show you, so that we take all the noise out. But that's just the way I roll. So
I love that he loves your purple. I color code my charts, just so you guys know, so that I always know if I'm looking at a longer term horizon or if I'm looking at a shorter term horizon. So I've trained my brain to know quickly which time frame I'm looking at based on what color the chart I'm looking at is.
Yeah, exactly. And a lot of it, a lot of it is personal preference, because everybody's brain is wired differently. And, people have a visual component to them, or they're more kinesthetic, or they're more auditory. And so it just depends on what your learning style is as to how you actually want to have your charts. But I will, as I said, I will see things. And we were talking about some things here on the channel, because we're a new channel. We just got started with the channel before people like Crypto and even Carl from the Moon was saying it. And then like about 3 or 4 days later, they're mentioning something that we'd already seen, because we have everything in there. And for me personally, it means I don't miss out on anything, and I get to see patterns earlier than some of the other technical analysis on board. Number two.
Well, that's relevant if you're using tight stop losses too, because if you don't have all of the market structure charted out, like if you scale out here, you'll see on this pattern, some of these are just smaller patterns I was trading, but some of these are key support lines that are starting to be respected in the market, right? And some of these go back from the weekly or the monthly timeframes, right? So the reason you want to have all of these plotted on is if you're entering a long or a short that has one of these support or resistances just above it or just below it, you really want to be thinking about that, because that's more likely the direction that the market's moving in, right? And, you know, you can see I've got this green band plotted on up here as a whole channel, because this is going to be an area where we've had a ton of all-time highs and market lows. This region here is going to represent massive resistance to break through. So, you know, if you're entering along and you're just below this area, I wouldn't be trying to do keep a multi-day trade open. You can expect lots of bounces back down before we ever break through this area, right? So you always want to be taking into account these support and resistances when you're thinking about where your stop losses go, and whether or not you're entering the trade at a powerful enough position that you can use a really tight stop loss. And if it's not a super powerful position, either it's a get in and get out, in other words, you're scalping, or you need to use a longer stop loss, or wait, have a little patience, because truthfully, patience is one of the more important ingredients to making money as a trader.
Yeah, for sure. So that's that green channel is around 40,000 up to 42,000, isn't it? Something like that, or 42.5?
Just above 40,000 up to about 42.5 roughly. Yeah. And if you scale across, you'll see multiple rejections in this area, as well as, you know, previously numerous all-time highs or market highs in this region, right? The major shoulder for the last all-time high before the penultimate all-time high we had was in this region, right? We peaked, this was an all-time high here, and then we had another all-time high. So this is a zone where there's just a lot of market activity. We've got Fibonacci levels right in the middle of this zone. Lots of reasons for both resistance and support in this zone. So when we ultimately break through this zone, we're probably going to see serious bullish action, but I wouldn't expect us to break through this in one run. Like, you know, we've already made an attempt through it. We're probably going to come back down. We'll probably make another attempt. We might get rejected somewhere else in this zone. It's going to take a lot of volume to get us through this zone.
Yeah. For those of you who have just joined us, we're just doing the technical analysis and talking about stop losses. And number one, stop loss is 5%, or in relation to what your leverage is. And also we talked about that it looks like we're going down to close the CME gap, which was created on Sunday afternoon. And here are my insane charts with the purple background. And so the other way that you can approach stop losses is by using the Ichimoku Cloud. I use the Cracking Cryptocurrency Ichimoku Cloud because it's set up for cryptocurrency specifically. And these represent, if you're new to Ichimoku, there's green and red clouds, and they represent, have we got any red here? Yep, here's a red down here. They represent support and resistances. So when you're looking at your stop loss, say for instance, there is a short potential, like if you were to short this and you shorted, where would you put your stop loss? Another theory for stop losses is just above the Ichimoku Cloud here, because if we retrace, we could go all the way back up here. So if you put your stop loss just at 40,274, then you can have all of this volatility, leave the trade open and get those bigger gains for bigger movements, rather than getting stopped out, losing money, and then finding that the trade is a viable trade. And not only that, it's a really big trade. And then and you lose out on those profits because you fell short of the stop loss. So that's number two. Number two is using the Ichimoku to put your stop loss just above it, because this is going to act as support and resistance. Here's an example down here where we fell.
On the far side of the cloud from whatever direction you're trading, right? So if you're trading long, your stop loss would go below the cloud. If you're trading short, it would go above the cloud.
Yeah. So I was just going to show that here. So like if you're doing a long here, right? So we came down here, we touched.
Click off your lines for a minute so it's easier to see the cloud, Nicola.
You can't. I can't. Like if I just do that, it takes everything off. Oh no, here we go. Here we go. Okay. Awesome. Okay. Oh, I didn't know that. Great. Awesome. Thanks. So here we fell here, and you'll see that the wick just went a little bit below the cloud. That's why I said if you're going to set your stop loss, you want to do it just a little bit below where the cloud is for those wicks. But for example, if you were to have longed here and you just put, for some reason you long, you set your stop loss below the cloud here because we're longing. So it's the opposite side of the cloud, right? And then it came down, you'll see the cloud actually supported it. And if you'd had a tight stop loss, you would have got stopped out, lost some of your coin, and then boom, we pumped. And look at that. We went from 34,700 up to 40,500, 41,300. And you would have missed out on all of those profits because the stop loss was too tight. Does that make sense?
Yeah, really good. It's important to understand, Nicola and I both love the Ichimoku Cloud, by the way. I think it's one of the most powerful indicators in any trader's arsenal. When the Ichimoku is about to flip bearish to bullish or vice versa, it's bearish when it's red, it's bullish when it's green. It's a general rule of thumb, but the cloud will really narrow. So this is one time where putting your stop loss on the far side of the cloud is riskier because the cloud will be a lot narrower. When it's in that flip mode, trading is not as likely to be supported within the cloud. Trading's more likely to go through the cloud. So in that one instance, I would not use this scenario to inform you on where to put your stop loss.
Yeah. Well, I like using everything that we're telling you. Number one, tight stop loss, if you're doing a takeoff strategy. Number two, for the Ichimoku. But number three is your moving averages. So when you're using the Ichimoku with the moving averages, that can also really be a lot more stronger as well too. So in this instance, if you were to use the EMA ribbon, for example, and you put your stop loss just above it to counteract those wicks, your short would have been saved. If you put it right at the EMA ribbon top, you would have got stopped out. So that's why it's always good to just pip it up a little bit for those wicks. Does that make sense? And yeah, I'm just trying to think. This yellow one, by the way, is the 100-day moving average. So if you're using the Ichimoku, say I'm doing a strategy where I'm using both. I'll look at this and I go, oh, look, the EMA, say I entered my short here. Boom. And I go, you know what? Here's where I am at with the EMA ribbon. So if I put in my stop loss at 41.89, I would think that's going to be pretty cool. But then I will look over at the Ichimoku and I will go, you know what? I'm going to put it up a few pips above because the Ichimoku Cloud is just there a little bit above. So I need a bit more room because if we come up here, we fall short of the EMA ribbon top with this orange as the 20-day moving average. And so we could get stopped out if I set it there. So by using the two together, I can get pinpoint accuracy to the pip to create a little bit more space for that volatility. And this has been something I've been studying a lot of because I was getting stopped out a lot when I first started. I didn't quite get it. But now, now that I'm combining all of the different strategies to get those better areas of stop loss, I'm not getting stopped out as much, and certainly not getting liquidated. So number 4 is putting in your Fibonacci levels. So let me just put that back in there so I don't lose that, and we'll go over to Bitcoin. And generally speaking, with the Fibonacci levels, I like to start with, I need to go BTC Coinbase. I like to start, as I showed you right in the beginning, doing your Fibonacci levels from the very lowest point where we began our ascent in the bull run to the all-time high. And that way you've got the market structure for the entire run. Then on top of that, I'll put in Fibonacci levels for the movements to get those impulses. So I might grab my Fibonacci tool here, and depending on whether I want to know how far are we going to go to the downside versus how far are we going to go to the upside, is where I would put it. So in this instance, I want to know how far are we going to drop with this current short that we're in. So I just would put it at the very bottom of the market, price falling rather, and then I would put it up to the top, which is just above the market Fibonacci level by a few pips. I have set my my Fibonacci levels. Sorry, hang on a second. Let me just pull that down. I can't quite see. I've set my Fibonacci levels where the golden ratio is a gold color, so I can see it really easily. And you can just do that by double clicking on it, and then at the 0.618 and the 1.618, you turn it into gold. And that is a really good stop off point quite often for trading. And you'll see here that the golden pocket, we are just under, and in this last pump, we didn't go all the way to it. So using the Fibonacci's to go, I'm just going to go above the golden pocket here on the market structure, or the golden pocket here on that smaller impulse Fibonacci tool that I just drew. Either one of those is a good place to put it if you're shorting. Now, obviously, if you were longing it and you want to know how far could we go down from there, you would do the opposite. You would do your Fibonacci retracements from the top of the move to the bottom. And if you were longing here, you could then use those Fibonacci levels to go, you know what, we're doing higher lows. So if we were to come down to this Fibonacci level here and create a double bottom, that's actually possible in this market structure. So I would tend to put the stop loss just under it, because if we do go under that, then we're probably going to go way down. Or you could put it, if you had other confirmation with Ichimoku Cloud and what have you, you would look at this level here and go, well, we're doing higher lows. So if we go lower than this, it means we're going to go lower. So you get out sooner and your stop loss comes up a bit sooner. So if it does go lower, you lose less. Now, the only caveat with all of this is market manipulation, right? Do you want to say something about that? Because a whale can come in and just, it's not going to matter where your stop loss is, you're going to get liquidated, right?
Yeah, I mean, and there's always a risk of that. In fact, we talked about this last call, the difference between an A book and a B book exchange. A book exchanges provide their own funding for the leverage. So they tend to be a little bit more volatile because the exchange itself might be betting against you, right? There is known stop loss hunting happening on some of these exchanges, right? So the B book exchanges tend to be a little less volatile, and you can get away with slightly tighter stop losses on the exchanges that are providing third-party funding sources, because then they want you to win. They only make money if you make money, right? Yeah. I think bottom line, and that was just an awesome explanation, especially how to use the fib levels. Bottom line, either your leverage needs to be informing your stop losses, or your stop losses needs to be informing your leverage, right?
Yes.
Because you need to have a good risk management strategy. And conventional wisdom is, especially in crypto where it's a little more volatile, Conventional wisdom is you never bet more than 5% of your whole portfolio on a trade. So if your margin is 10% of your trade, but your stop loss is set at 50%, then that means you're risking 5% of your overall portfolio. Is that making sense? In other words, you can use 10% as leverage, but if you're only risking half of that as margin rather, but if you're only using half of it because your stop loss is halfway up, then you're risking 5% of your portfolio. So you need to know which strategy you're using. So have a set of rules, and every trader develops their own set of rules. So it's, I use a slightly different set than Nicola uses, but you also need a set of rules for when you're going to bend the rules.
Yes. Yeah.
So, for example, I often use the Ichimoku Cloud to inform my trades, but if I don't have confidence that the Ichimoku Cloud is providing me a good safety net, then I also look to Fibonacci zones and other things, major areas of support and resistance in the market, right? I also look at the VPVR, which I think is one of the things coming up that we're going to talk about.
So just to reiterate, you can do the 5% tight stop loss, making sure that you've only got 5% of your trading portfolio in the trade, so that if you do get stopped out or you lose, you can trade again tomorrow to make up for the losses. You don't want to be putting everything in. Number 2 is using the Ichimoku Cloud. Number 3 is using the moving averages. And number 4 is using the Fibonacci levels. And number 5 has to do with the number 2. And we have a very special video that's going to get uploaded tomorrow around 11 a.m. US Mountain Time of an interview I did with DavinciJ 15 this morning. And he talked a lot about stop losses, and he talked about number 2 being a really important number. So be sure to subscribe so you're going to get notified when we upload that video tomorrow, or make a note to come back to the channel if you're already a subscriber and watch that video, because we did strategies, we did his particular stop loss, we did a number of really awesome in-depth conversations there in that video. Hey, if you like the conversation we're having on conscious crypto trading, please like, comment, subscribe, and click that bell, click all, so that you can be notified when we go live, when we upload new interviews, and when we upload new trainings. Be sure to check out the next video.